So that's what being rich smells like. I'm just kidding. There's not a real stack of bills. Let's talk about being rich and unhappy, because America's rich, but it is not happy. When I started my YouTube channel, one of my biggest goals was to become a millionaire. How original of you, Andrei. I thought if I could have $1 million in my bank account, I would automatically someday become happy. And then sometimes I would read on the internet that having a lot of money doesn't make you happy, and I wouldn't listen or believe any of those. I'd be like, yes, it would. Now that I've become a millionaire, I don't feel any happier than I felt before. And I know what you might be thinking. Sure, Andrei, give me $1 million and I'll show you what real happiness looks like. But today I want to prove that notion wrong through the context of a whole country. And I'm not talking about myself personally. I'm referring to the United States as a whole country because we're doing good, like really, really good. For example, the latest data on Fred St. Louis Fed shows the household net worth in America is at the highest level we've ever seen, ever. Over 8% of adults in America, almost 1 in 10 people are millionaires. And there's plenty of opportunity because unemployment levels are also low. And wages across the private sector are at the highest levels they've ever been, meaning people are making more money than they ever have before. And if you want to buy a house or borrow money, it's also cheap because interest rates are almost at the lowest point they've ever been. Money's all around us, and we are still not happy. The consumer sentiment, a study done by Michigan University, shows that our happiness and confidence level is at recession-level lows. We are about as confident and happy now as we were during the pandemic when the world was falling apart. And now that we're doing a lot better, financially speaking, we are still unhappy. So in today's video, I want to talk about why we're all rich and still unhappy. Let's begin. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the therapy session. So let's quickly review what just happened. We had a pandemic, and then we had one of the most unprecedented interventions by the central banks we've ever had before, where we flooded the economy with funny money, dropped interest rates back down to zero, and inflation got a little bit out of control. So to prevent things from totally getting out of hand, the Federal Reserve has started to do what's called tapering, or slowing down. So instead of buying $120 billion a month of assets, Papa Powell has decided to slow the printer down $15 billion a month. So that means $10 billion a month less in treasury bonds and $5 billion a month less in mortgage-backed securities. Now this will continue for the next 8 months, bringing us to around July of 2022, at which point the central bank will look at the economy and the data and assess if they need to increase the interest rates, but we're not there yet. In the meantime though, the stock market and the S&P 500 continues to make record highs, our real GDP is growing, America's making more money, Americans are quitting their job at a record pace because they also want to make more money, but our confidence level is going down. According to a Gallup poll, 2/3 of Americans have said that the situation is getting worse. So let me share with you some interesting numbers as far as what people have said are the most pressing issues facing us today. I'll make sense of it and then put it in context of what it means in terms of money. At the bottom of that study was moral decline, which represents 4%. Then unemployment and a lack of jobs, another 4%. Race relations, 5%. Higher cost of living and inflation, another 5%. The economy in general, 6%. The federal budget deficit, another 6%, which by the way is now up to $2.9 trillion. By the way, the budget deficit is just a way of saying that the government is bringing in less money every year than it ends up spending, which is okay that the budget deficit number goes up, but the idea is that we catch up and pay it off faster than it exceeds. But we've been in a budget deficit since 2002, so it's not okay. Then unifying the country was another problem at 7%, immigration 11%, the Rona 15%, and poor government leadership as the most important at 21%. Unfortunately, this negative perception about bad money management will continue to persist because of 2 major reasons. Reason number 1 is labor shortage. There's just not enough people working and making stuff. And of the few people that are, companies have to incentivize the workers with more money so that those people can come and make stuff for them. And because when you increase wages, you have to pass on those costs to other consumers in the form of raising the costs of goods and services, which means prices go up. And the second reason is because of supply chain issues. There's just not enough stuff being made and shipped on time. And this is bad because the Federal Reserve has told us that this problem will continue to persist well into the next year. And this means that even though we've started to taper off, by July, when we've completely tapered off, there should be no more excuses for us why inflation is still high. But if the problem of supply chains and labor have not been solved, then prices will still be high or they'll continue to go higher, which will contribute to people's perceptions that the Fed has lost control over inflation and that Papa Powell just can't control the prices going higher, which will further contribute to a lower morale. So that's kind of what's going on, but let's bring it back to the original question of the video, which is, why are we still rich and unhappy? Reason number one is because when it comes to money, everything is relative. When we look at inflation, or the measure of purchasing power over time, it depends on your individual needs. I used to think that inflation affected everyone across the board. When I looked at the CPI, or the Consumer Price Index, and I saw a number, I would just think, okay, well, if it's going up, that means everything's kind of becoming more expensive for everyone. But that's only true if you're buying that specific thing. For example, if you're someone like me who works from home, which is probably fewer than most, you probably don't need to travel, which means you don't need a car, which is also why I'm so pale, I need a tan. But if you're somebody who does travel for work and your car breaks down, you need to buy another one. And the cost to replace it is extremely high. It's up over 8.3% recently, or over 45% if we're looking at July's numbers. And that's extremely expensive, which hurts us financially a lot, and our perception of inflation, which feeds into the narrative that things are becoming worse. Not to mention the fact that gas prices have increased over 70% since the middle of 2020. So the problem is, even though certain aspects of inflation have gone sky high, the overall CPI report shows that it's up only 5.4%. Even though, yes, wages have increased, they haven't increased 5.4% across the board. That means real wage growth is actually trailing behind inflation, which further feeds into the narrative that things are getting worse. And the reason number two that we're unhappy is because of asset inflation. Asset inflation is not measured by the CPI, that Consumer Price Index. In other words, when stocks and real estate and crypto goes up in value, we don't really include that data in the CPI because asset inflation is somewhat closely tied to interest rates. And because the Federal Reserve has control over interest rates, the data becomes too complicated, so we kind of toss it out. And that's why when people talk about inflation in this country, we can never agree on what that number means, because it's all relative. In other words, if you're somebody who wants to invest in the stock market, you might look at the S&P 500 and think, well, wow, I'm not gonna put my money at the top. There's no way. You should start investing as early as possible, but that's how people think. If you're somebody who wants to invest in Bitcoin, you might look at the graph and think, well, there's no way I'm buying Bitcoin at the top. You should dollar cost average over time, but that's how people think. If you need to buy a house, you might get priced out because there's corporations like Zillow that are paying above asking. They've stopped doing that since because they've started to lose money, but BlackRock still wants you to smash the loan button because they still keep buying. So all of this sort of culminates into this general feeling of unhappiness. But here's what's interesting. On the whole, we're doing a lot better now than we were 10 years ago in 2011, when the average hourly rate was $22.85 in comparison to this year's $30.96. That's a growth of 35.5% over the last decade in comparison to inflation over the same time period, which is up 24.5%. So clearly, we are outpacing inflation in terms of wage growth and consumer prices. And if you invested your money in the last 10 years, you're doing a lot better. So people are becoming wealthier, but they're not necessarily becoming happier. And here's ultimately why. No one understands inflation. In 1997, economist Robert Shiller did a survey asking people about the effects of inflation. 38% of people said they felt angry a lot, and an additional 48% of people said they felt angry sometimes whenever they all saw the price of something go up. What's funny about that is that no one could agree as far as who they were all angry at. Some people said, my boss, my executives, my company, my suppliers, my wholesalers. There was no consensus who people were supposed to be generally angry at for all of this happening. So then the survey asked another subtle question about inflation. It asked, in the last 5 years, why did your income grow? Hint, hint, it's because of inflation. That's what the survey wanted people to acknowledge. But unsurprisingly, people said, "'Cause I work hard and I deserve it, it's all because of me." So at the end of that survey, it gave people one last chance to acknowledge that inflation benefited their wage growth. The question asked, if inflation was higher, how would that have impacted your income? The answer should have been, my income would have gone up. But instead, there was an answer that was kind of all over the place. Some people said my income would have gone lower, some people said stay the same, and other people said it would have gone higher. Which means that most people don't understand how inflation integrates into their lives. They only understand the negative aspects of it because they see the price go up and they're like, well, this kind of sucks, this doesn't feel good. But not a single person acknowledged that they also benefited in terms of wage growth from all of that inflation. So the truth about inflation, whenever we talk about it, is that it's really hard to talk about because it depends on who you ask. It's like Vegeta. Is he a villain or is he a hero? Or is he an anti-hero? I guess it depends, Kakarot. All of this kind of reminds me about a story that I experienced in the middle of my career that I hope you take something away from. When I was around 23 years old, I was working for a startup company. I was making maybe $24 an hour. I felt really important because my title sounded cool. I was the director of photography, and I was very happy with how much money I was making, mostly because I didn't compare myself to anyone. Until I found out that someone I managed who also worked at the company with me shared with me how much money he was making. And it was just a little bit more. And my entire outlook on my job and the company itself just turned completely upside down because I thought, how could this be? I have seniority, I've been at the company longer, I have more experience, I manage this person, therefore I have more responsibilities. How is it that they're making more money? I became a victim of something called salary compression. This is another form of inflation that steals from us. And this is a very real thing that happens all the time. If you work for a company that doesn't give out raises very often, it creates a situation where these employees get left behind while the economy gets more expensive. This could also happen if the company that hired you starts to make a lot more money than it did when it first hired you. And even though I was very happy with making $24 an hour, I didn't see it as making that much. I saw it as not making $2 more than what I should have been making. And the reason I bring that story up is because I feel like that is going on right now, but on a macro level, on a national level. Because even though the numbers look good and we're told that we should feel happy, we still feel it when we read things like billionaires are now 62% richer, now up $1.8 trillion. We feel it when we go to work and realize that CEOs are making 351 times more than the average worker. We feel it when our friends share that someone just made millions or even billions off of some dog-themed cryptocurrency. And we feel it when we go home and see it all over social media. And it's that context of price appreciation and supply chain issues and more competition that makes people understandably upset and pessimistic about the future, even though we could have benefited from that inflation too. So then the question becomes, what can we do about it? The simplest thing you can do today is just to have watched this video and acknowledge that comparing yourself to others is the thief of all joy, because then you start to feel inadequate. I can't speak for everyone, but I know that even for myself, even though I've done relatively well here financially because of YouTube, I know the moment that I compare myself to another peer of mine who's done financially better, I'll feel worse off about myself. I'll feel happy for them, I'm not saying that, I'm just saying that I'll feel like, man, I could have done better. So instead, I need to acknowledge the fact that this is how it works and not do that, and maybe instead practice some gratitude and maybe be grateful for something that I have that others don't, like perhaps my health, even though I've been kind of getting thick lately. Look, before and after, you see this chipmunk face? I don't go to the gym because I'm self-conscious about my body, but I'm self-conscious about my body because don't go to the gym. Metaverse. Bo Burnham jokes aside though, as far as actionable, real advice, I would just switch jobs every few years, that way I don't fall victim to salary compression, and then I would move to a lower cost of living area where I could create my own deflationary reality where I actually win, and with the surplus of money that I've saved, I would invest into a 401k because the government increased the contribution limit from $19,500 to $20,500, which represents a 5.1% increase, which should help with inflation just a little bit, and with the surplus of time you saved by watching this video, I would smash the like button for the YouTube algorithm. As always, don't forget to have a great rest of your day. Smash the like button, subscribe if you haven't already. Go get up to $250 worth of free Bitcoin with this BlockFi link right here, blockfi.com/Andrei. Go get your 2 free stocks using the Webull link down below. Then go track them automatically with the spreadsheet link down below in my Patreon. Love you. Thank you so much for watching this video. I will see you back here on Monday and Friday, sometimes a Wednesday. First world problems. I'll see you soon. Bye-bye.